All right, listeners, a lot to unpack out there this week. I have some thoughts and some activity that caught my eye. But Dan, it's been an absolutely wild week in the equities. As I mentioned, we saw a lot of earnings moving us all over the place in the major indices. Nasdaq actually dipping into correction territory at one point. Now all is right with the world again. Everything is rallying back again. We saw vol get a little bit spicier earlier this week, now coming back down the other side of it again. And then we have the geopolitical risk spooking everybody in the equity space as well. And if all of that wasn't enough, sir, we had the Fed popping up in the middle of this week just to throw a little bit of a wrench in the work. So a lot going on in the world of equities, sir. What caught your eye this week?
Well, you mentioned NASDAQ. Let's start with that one. I mean, we really have a market that's interesting to me. And part of it is this tech sector. You look at Microsoft, Alphabet, Amazon, and Meta, and Oracle. The issue that the market's concerned about is that they're spending $1.57 for every $1 of free cash flow. So, stock indices, when it looks at history, when you tell it, here's what's happened last week with economic, and it goes, okay, but tell me about the future. Stock indices are forward thinking. Am I going to get a dividend paid? What's happening with earnings? Is there stability coming forward? Do I expect more volatility? Tell me about that. That's what the stock indices give us, that barometer of its belief about the future. And, you mentioned the Fed. Well, the Fed said we're leaving things alone, which I think is reasonable, by the way. And, Mark, something that I find interesting that they said they were going to do, but it actually did happen, and that is they were not giving forward guidance. And you can debate whether that's a good thing or not, but I kind of think it is a good thing. It's the market can lean against any word that the chairman says, and it'll be parsed. I remember being in Germany, in Frankfurt, teaching a class at some banks, and I had some time. I went to the Bundesbank for lunch with someone I knew there who took classes a few years before. Anyways, I'm sitting in his office, getting ready to go to lunch. A fellow comes in, they're speaking German. He knows I barely speak English and little on German. So they talk, he pulls out a book, and they're looking back and forth, and he closes the book. The guy walks out, and he just looks at me, and he said part of his job was to formulate the president of the Bundesbank speech. And he thinks they used that word before, whatever that word was. So, and same thing happens here. Every word is parsed. But did we hear anything that scares us? No, not really. And so it's fairly stable in that regard. And the expectation is high that before the year is out, maybe September, we're going to see an increase in the Fed's Fed funds rate. And again, that's kind of debatable because when we think about it, labor, we got some good numbers coming out that shows labor is fairly stable. We don't really have an issue. Well, what about inflation? Well, we had PCE coming out. If you look at core PCE, it's at 3.7% versus being 4.15% the last report. Core PCE also, the annualized rate there is down to 3.3% versus 3.4%. So we're seeing some positive things in that regard. Now, we do have the geopolitical event, which is theoretically not weighing in this Fed decision. So the Fed, I think what they're doing is reasonable. I like that they're not doing the forward guidance because that builds up expectation in the market. And if it doesn't happen, then you and I see that huge kick in volatility. And what we are seeing, again, starting with the Nasdaq, we're seeing buyers coming in. It's what I call an equal and opposite. It means as fast as we go down, we come right back up. And we're seeing that across the board in the indices. That usually indicates we've got cheap enough to find buyers. Now, are they going to follow through? If you look at the S&P, it's in the same boat. Nasdaq, Dow, also the Russell, they all have gotten deep enough to find these buyers. And what fascinates me, tomorrow you and I have Friday. So are the people who bought the Nasdaq today, for example, are they going to go home tomorrow being long? Or do you and I see it making new highs and backing off tomorrow?
It is spooky to be long equities over the weekend these days. A lot of terrible news pops off over the weekends, Dan.
Yeah, you're right. We got all it takes is just something in the Middle East that can change everything as we go into the weekend. So, as you said, Mark, does that mean we're going to see it softer tomorrow? Will it back off a bit? Does it mean it's a change in attitude? Not necessarily, but it could be people being cautious that have been short, that maybe today is what we're seeing as some profit taking. Is that it? Or do we close strong, which would imply something about confidence going into the weekend? Like you said, do people want to take that chance? So I think tomorrow's action will be an interesting barometer that you and I can look at for maybe some clues about next week. And I think an important part, and Mark, that's the advantage that we have by looking at futures, because it does trade 23 hours a day. And so that means tonight, after the market closes, we're going to see Asia, I think by time zone. And so we have Asia starting out. Does Asia begin by continuing this buying momentum? If it does, it may give us some clues about what we can expect on Friday. So I think the Asia session tonight could be another clue that you and I can look at.
Oh, you laid a lot down there for us, Mr. Dan. This is since we're focusing on NASDAQ listeners. Pop on into that drop down at cmegroup.com/TWIFO is the place to go to follow along with the show. Then you're going to go into equity indexes. Those are 4 slots down in the asset class. Product family, we're going to go to US Index E-mini. Then we're going to go down 2 slots to the NASDAQ 100. You'll see NASDAQ hanging out a little bit north of 28,000 in that front future right now, 28,177 when we kicked off the show. Still down about 105 handles since Monday, or about 1/3%. Obviously, we saw a lot of whipsaw action even over the last 24 hours. NASDAQ did a lot of living just in the last 24 hours, including a threatening correction, coming back out of it now, but still kind of teetering on the precipice. So a lot of wild things going on. So with so many strikes being blown through in both directions, you could expect a lot of zero-day strikes to be hot and heavy, and that is the case. The 28,000 is a very obviously psychologically important level, expiring in a few minutes. Those have gone up about 2,300 times this week. By the way, it's an active week in the NASDAQ, if you couldn't decipher that from what I was laying down earlier. 312,000 contracts on the tape right now in the NASDAQ. So a fairly active week in the NASDAQ, and also the 28,500 calls expiring tomorrow. Also pretty active. But you know what, Dan? Those aren't the most active contracts. In fact, the most active contract in a very spicy week in the NASDAQ is not a zero-day option, which is kind of wild. We're going all the way out to December, Dan. When's the last time you talked about December with any sort of equity type option? It's been a while, but we're going all the way out to December, listeners. That's about 140 days if you're looking at the calendar right now. That future in December, a little bit higher, obviously, 28,451. And if you're wondering what is the vol right now in the NASDAQ, across the term structure, it's hovering between right about a 24 to about a 25 half. The DEES vol is about 24.30, off a little over a point this week. And puts are still where the action is, 15.4% bid this week versus 14.7% bid last week. The calls, nobody wants to touch them. 10.3% discounted last week. 11.6% discounted this week. But Dan, what caught our eye out here this week, and again, the most active contract in a hot week in the Nasdaq are the DEES 31,500 calls. They've changed hands 2,831 times this week, listeners. So I certainly did not have DEES upside on my bingo card for this week, but that's why we crunch the numbers, listen. That's why we do the show at the end of the day. If you do a little bit of digging, as we did, it turns out that looks like, first off, it is not just the 31,500 calls. It's actually a call spread. The DEES 31,500, 32,000 call spread was trading pretty actively this week, nearly 1,000 times on Monday, about 1,400 times on Tuesday, and then about 600 times again on Wednesday. Seems like that was definitely closing. In fact, it seems like they were closing the latter portion of the trades because the OI today was only about 400 left. So they obviously put it on and then took it off. The interesting thing, the big day was Wednesday. The big day was Tuesday. So let's look there. It looks like it traded for an average about $101.79, listeners, if that trade floats your boat. So, Dan, kind of a weird one with all this whipsawing and downside in the NASDAQ, all this talk of a correction in the NASDAQ. I did not have a DEES 500-point call vertical on my calendar this week, sir. Does that float your boat? What are your thoughts?
Well, first, that really surprises me. I totally agree. And you know what's fascinating to me, listening to you, Mark, is what does it tell us about the attitude? What does it tell us about what people were believing going down the road? Now, it seems like obviously this has been reduced, but it does say something about the outlook that someone had. And I'd be interested to see what they're thinking now that we're having a bit of a pop-up today on that. But
yeah, they were a little quick on the trigger finger, maybe, if they were buying this thing. If they closed it on Wednesday after the Fed, maybe they wait 24 hours, looking a little better.
It does. But, you know, it would take some pretty strong conviction when we think about how the market behaved this week, as you pointed out. It hasn't been very positive. And then today, these buyers come back in. But they have a few left, so maybe that'll help them on those. But yeah, I think that attitude is a very interesting barometer. What are people thinking about when it comes to this market? Are they thinking that, you know, they're overspending when it comes to the tech stocks? Is that it? Well, maybe they don't believe that. And maybe they do believe there's more upside. I do. I mean, you think about AI, we're just starting. We're at the very beginning of this whole adventure. And to say it's mature and it's over, and I just have a hard time believing that. Not only because of the capital commitment, but just where we are in its life cycle. So I wouldn't have expected that one at all, Mark, but I find it very interesting. See, that's what this insight that you give us in the options can feed those ideas and insights that we can get.
Well, Dan, speaking of ideas, maybe an old idea. Everything old is new again in this market, and that certainly is the case. A CME going back to the well. I guess, what do they say? The third time's the charm? Is that the old saying, Dan? Because we're going back to the single stock futures waters. If you're not familiar, listeners, this has been tried a few times before. It was started back in the late 90s was the first time I really encountered them. They were tried a couple of times since. There was an entire exchange designed to promote these called One Chicago that has now gone the way of the dodo. But CME shaking up the equity world this week, Dan. Now we have single stock futures on all these hot mega cap names we've been talking about forever. So NVIDIA, Tesla, Apple, pick your poison, Dan. You can now trade futures on them. What are your thoughts, sir? We've seen this dance once or twice. Are you excited? Are you kind of lukewarm? Are you not a fan at all? What are your thoughts?
Well, you're probably talking to the wrong guy, Mark, because when it started before with One Chicago, I was such a supporter of this idea. I thought it would explode. explode. I really, and I knew so many of the guys over there, and I just kept waiting for this thing to take off in the United States. You got the advantage of leverage. You got the advantage of participating in stocks that may make it affordable, for one. And it did die here. But, it did kind of take off in Australia and also kind of took off in the Netherlands. We saw some support for single stock futures. But in the United States, you're right. I like what you said about going the way of the dodo bird, because that is what happened. But, I'm still a cheerleader for these things. I think when we look at the economics behind it, when we look at the ability of what it can represent for people to participate in the equity world, that they may not have the capital to do it in the straight market. I think it really offers an opportunity. I think the real key actually is education. It's that it's got to get the info out there on the CME shoulders to make sure people understand what this is, the advantages of it, because it could turn some people off. Because one, if you're an equity trader and you hear the word futures, well, should I just drive by the exchange and throw my money out the window? That's what people think about when it comes to hear that word futures, which is totally wrong. And so there's that issue to take an equity trader to make them comfortable with futures and then to show them the advantages of looking at this. That's why I think this, if you've never traded futures, by the way, a place to begin is just watch them, just look at them. And you're going to find out that there may be some opportunities there. And I think if the education can be done so that people understand the opportunities and the risk associated with these, Mark, I'm very positive on them. I really hope that it takes off because I think it could be a useful product for a lot of people.
Just think, Dan, if they take off sometime in the not too distant future, you and I could be on this show talking about options on Tesla single stock futures on this show. How wild would that be, sir? So here,
done. I love that idea.
Brave, perhaps terrifying new world awaits us all. We thought we'd put it out to our audience, Dan, to see if they're feeling the love for these or not. So we asked them. In fact, it's still live right now, so things are moving around a little bit. But we asked them, Dan, are you excited about the launch of single stock futures on big names like Tesla, Nvidia, Apple, and more? We gave them three choices, Dan. We said, heck yes, hell no, and meh. What do you think is winning right now in our poll, sir?
I'm kind of torn between meh and hell yes, because if people have some insight into this, then hell yes is at the top of the list. But I think in general, going back to that education issue, maybe meh.
You're spot on, sir. You know our audience, 48.8%, so nearly half are saying meh. It's hard to blame them. We've seen this dance a couple of times before already, so it's hard to get too excited. But there is nearly a third, Dan. 29.3% are feeling it. They're saying heck yes, so they're excited. Only 22% right now. That actually has gone up. It was a little lower before. I think it was around 13%. So a few more naysayers popping in over the last 24 hours, but 22% right now saying hell no. So, Dan, we got ourselves an interesting market here. And as you point out, that nearly 50% meh does represent an opportunity for some education. So might be interesting times ahead.